Hello, traders. FX Pip Collector here. Today is Wednesday, February 26th, and this is my morning video where we take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely join my free Discord trading community, linked at the end of this video down here in the corner and in the description of the video. If you'd like to check out my website, it's fxpipcollector.com. Gets you access to all the benefits listed below and more. So, anyways, first thing first, I always like to check out the news calendar. It's very, very slow this week for news. We really don't have much of anything today. We got new home sales for the U.S. this afternoon. Definitely not a market mover. We got a little bit of oil news. So, if you do trade oil, maybe you'll get a move on oil later, but definitely not going to affect Forex much. But these G20 meetings are starting today. Those definitely can possibly move the market a little bit if the press talks to people as they are leaving the meetings. But overall, very, very, very slow week for news, especially on the US dollar pairs. So that's okay. I mean, it doesn't mean there's not going to be some moves. Honestly, though, this has been a pretty slow week for the dollar so far. I mean, this is the daily time frame US dollar index. The last one, two, three, four candles are very, very, very tight range, very, very slow going. We're still at a very critical point on the US dollar, in my opinion. Like I've been saying these last couple of days, if it goes up, if it breaks structure, that's going to prove to be wave C, and I'm definitely going to assume that it's going to go back up and make a new high, which means that all the dollar pairs would potentially go down. At the same time, it could possibly just go up a little bit, make a lower high, and actually go down and take out all these Fibonacci levels, which to me will prove that this is not an ABC, but it's actually a 1, a 2, and a 3, and we are actually in that big weekly time frame reversal that we've been hoping to see, which potentially would have the US dollar going down for probably at least a couple months, at least 60 days or so, I would say. So definitely a very, very crucial point on the US dollar. I mean, if the dollar goes up, breaks structure, then we definitely are going to be bullish the dollar. If the dollar just drifts up a little bit, which I think it probably will, and then makes a lower high, then that's going to kind of change things. And we're just going to keep on being bearish the dollar. Definitely, definitely a very crucial point for sure. So moving on to the dollar pairs, because of the analysis I just did on the US dollar index, that applies to every single one of these US dollar pairs. So if the US dollar index does end up breaking structure to the upside, then this would end up breaking down and probably going all the way down and making a new low, and this would end up being some sort of a corrective pattern. Definitely very slow going so far, isn't it? We got one wave up, we got one wave down, we got another wave up. We're sitting at the 100% Fibonacci extensor, which is not a very good sign that it has not been able to blow past that yet. If this was a wave three, you would expect it to blow past it. Now, if it doesn't go beyond this 100% today, I'm gonna come to the conclusion that it's not a wave three and it's actually a wave C, and maybe it's gonna go down quite a bit further. But for now, we definitely do want to continue to be bullish. It could possibly blow through the Fibonacci level today. We'll have to watch and see. Down on the 1 hour time frame, I got my Fibonacci retracement on the last impulsive move up. This is all very sideways price action, especially looking at the US dollar index. You can see now, this move down, I don't really think this move down is over, but it could possibly make a higher low, right? So we could get this going down to a Fibonacci retracement level, and then we could get an impulsive turn and a higher low and the continuation of the uptrend. If we do see this picture, then we definitely want to take advantage of it because we could still be in that big wave three, which would be lots and lots of pips to the upside. On the same hand, it kind of seems like it might even end up going down further, maybe even taking out some of this structure right here. Maybe there is an ABC hidden in here someplace. Like maybe this is supposed to be the A, this is supposed to be a B, and it goes down and makes a big old wave C like this. So I'm definitely bullish, but I am seeing the idea that it might go down more. So unless you see a nice big bounce at a Fibonacci level, I probably wouldn't take it as a long opportunity. Moving on to the pound dollar, pretty much exactly the same as the other pairs, except for the pound dollar is drifting above the 100%, which is a little bit of a better sign. If this does keep on drifting up, then that's great. We definitely want to continue to look for longs. As of now, there's really no reason to be looking for shorts. If the US dollar index breaks up, that definitely will be a reason to start looking for shorts, but that has not happened yet. So for now, I'm definitely still very bullish. Going down to the 1 hour time frame. I mean, honestly, this thing could just keep on going up. I mean, this actually could be a wave A right here. This could definitely be three waves up for B, and this could be just a wave C. This thing could easily just keep on drifting up, especially if it really is a wave three on the much higher time frames. So I'm definitely very bullish still. Definitely still looking for longs. I'm kind of hoping it turns into a bigger correction, so it gives us another chance to potentially get in. And something like that would be nice, if this over here was the wave A, and then this was actually supposed to be a wave B, and then it goes down for a C, and takes out these lows and then turns back up. That would make for a much better, much clearer entry. But we'll see. I mean, it might just keep on drifting up from here. The trend is your friend. If it really is a wave three, it could just keep on going. Going down to the daily time frame, the Aussie dollar really doesn't look. I mean, if this is a one, two, three, it's not really looking like a wave three. Wave three is supposed to be the biggest, strongest wave of a trend, so definitely give us some doubts about that being a wave three. We are at structure right now. If it breaks below this structure, we are gonna have to definitely continue to look for shorts. If it rejects this structure and keeps on going up, then great. We'll just keep on looking for longs. Definitely doesn't really look like the shape of a one, two, three, though. That's for sure. But when you get such a significant structure break like we just recently had, most of the time it does break structure and pull back, and then it'll continue up. So we might just be in a, break a structure pullback and then continuation pattern. So going down to the 1 hour time frame, really pretty much all week long, the strategy has definitely been looking for shorts. I mean, it definitely hasn't given you any reason to look for longs. Yes, yesterday it tried to break structure, but rejected it. But for the most part, this is lower high, lower high, lower high, lower high, lower high. So I would continue to look for shorts. If it continues to make lower highs, lower lows, then why not continue to trade with the flow? And the flow is definitely down. But on the other hand, if it does go up, if it does break structure, then you definitely want to switch it up and you definitely want to start looking for longs. The higher time frame uptrend could continue very easily. Like I said, this might just be because of the break of structure we had on the daily. Now we're getting a pullback. Kind of looks to me like it almost could be just an ABC correction right here too. Like this is maybe three waves of A, wave B, and that way the wave C. It breaks structure, then continues the uptrend. So keep an eye out for those breaks of structure. It might give you an opportunity to get long again. Kiwi dollar, exactly the same analysis as the Aussie dollar. That's why I don't cover it. I do trade it, but I definitely don't cover it. Exactly the same price action and analysis as the Aussie dollar. US dollar CAD, I mean, I'm still looking at this as possibly being the end of a wave C on the higher time frames like the weekly and possibly being in a downtrend that would last maybe at least 60, 90 days or more. So I'm definitely still trying to get short, but the thing is this move up right here is looking impulsive. It's looking like a trend. So it's kind of making me wonder if this is going to stretch out into a bigger move, and that even if it does push down, it might not even be the continuation of the downtrend. I was looking at this as all right, well maybe this is an A, this is a B, and now we're in a C, and it makes a lower high like a running flat type pattern, or it goes up and breaks the high and then goes down. Something like that could be possible for sure. So I'm definitely still bearish. I'm just thinking because of how impulsive this move up is that it might not be quite over yet. We are at the 78%, so if we do get a break of structure on some of the time frames, I definitely will turn bearish and I definitely will start looking for shorts just in case it does keep on going down because we are expecting a big move down. But I need to be a little bit careful because it could just bounce, go up, and then later on continue the downtrend. So we got to be a little bit careful on assuming it's going down. Going down to the 1 hour time frame is where I would want to see a nice break of structure before I would probably be willing to go short. Like I said, we are at the 78% fib, but it could possibly turn there. If it does turn there, then I would want to see this. I'd want to see like that 3, 4, 5 shape, that double top shape that you see pretty much at the end of every trend, kind of like that right there, and then an impulse it down and a break of structure. If I see this picture right here, I definitely will turn bearish and I definitely will be looking for shorts. If I don't see this picture, then I'll either wait for a sword, or if you do trade the sort of time frames, you could be looking for logs because, like I showed on the daily time frame, it might just keep on drifting up. It might turn into like an expanding type thing on the daily time frame, which means it would go up and take out the previous highs, probably go up and break structure before it actually turned to the downside. Moving on to the US dollar Swiss. The US dollar Swiss is definitely still maintaining its move down, possibly because of the Swiss strength that we've been having. To be honest, the US dollar Swiss still looks like a 1, 2, 3. It looks like a one. It looks like an ABC crescent. It looks like a 1, 2, 3, and it looks like it potentially could just keep on going down very, very easily. Definitely no signs of this being over. Definitely no Fibonacci bounces. Definitely no breaks of structure. Definitely still very bearish. Going down to the 1 hour time frame, we definitely do have a little bit of an impulse to move down, but it's not really at a fib level, so I don't know if I personally trust it or not. I think there's a chance that it's going to go up more. I would want to see a nice Fibonacci bounce before I would be willing to go short. Maybe something like this would be a nice short. But I'm definitely still bearish. We notice that we have a very nice little five-wave pattern right here. So more than likely, this is like a wave A. We're probably going to drift down in a wave B, and then we're up for a wave C. So I think there's a good chance it might go up more before it actually does continue down. But if we really are in a wave 3, like it looks like we're in a wave 3 on the much higher time frames, there's always a chance this keeps on going down because wave 3s are supposed to be the biggest, strongest wave of a trend. So there's definitely a chance it just keeps on going down because wave threes are supposed to be big, strong trends. I would kind of expect it more to see something like this, but it might not end up doing that. Moving on to gold. Gold has been a little bit impulsive to the downside. Definitely no reason to say it's over on the higher time frames. There's definitely no break of structure on the higher time frames. There's no, significant fib bounce, no break of structure, no lower high. So there's no reason yet to say that this trend is over. And I definitely think we're getting close. I think this could personally turn into like a ending diagonal, which is a very overlapping pattern for a wave five. I still think this wave five is going to probably hit the $3,000 an ounce area also. So I'm overall definitely still very bullish on this. Going down to the 1 hour time frame, as you can see, we have a nice five-wave trend over here. So I was wondering if this is like a wave one of a ending diagonal, wave five, and this is actually supposed to be a wave A. This is actually a wave B right here. And then this move down is a wave C. I was thinking that it was going to go down and make one more attempt to the downtrend yesterday, but it kind of drifted up quite a bit more. But it really hasn't proven that it's over yet. I would think that it still possibly could go down again before it actually goes up. So yeah, gold is kind of a tricky one. If this isn't really an ending diagonal, then I would expect it to be extremely overlapping, extremely messy, because that's basically what an ending diagonal is, a very overlapping, messy five-wave uptrend. So I personally would be looking at this as possibly a wave two of an ending diagonal. I would definitely still be looking for longs, hopefully getting some nice Fibonacci bounces, hopefully getting like a double bottom at this fib level to go long for the continuation of probably a wave three of a ending diagonal, wave five. So moving on to the US dollar yen. To me, all the yen pairs are definitely still in a downtrend, and I definitely still see the possibility that they continue down, probably for quite some time. But we do have a very clear five waves on all the yen pairs, so we might be in for a pullback. We might be due for a much bigger pullback, maybe a crutch into the whole five waves. And it possibly could even turn into something beyond that, especially if the US dollar index breaks to the upside. But for me personally, if I do see a move to the upside, I definitely am going to assume that it's nothing more than a crutch into the last wave, and that it will probably make a lower high, and it will probably continue to make those lower lows, lower highs. So going down to the 1 hour time frame, I don't have my Fibonacci retracement on this whole move down yet because it hasn't broken structure yet. Until it actually breaks structure, I mean, there's always a chance it makes a lower high and keeps going down. But once it does break structure, the first thing I would do is I would throw my Fibonacci retracement on the whole five-wave pattern, which it's definitely a five-wave pattern. Then I would observe it to see if it makes an ABC, like an ABC crescent to the last five waves down, goes up to a Fibonacci retracement level and then continues the downtrend. Or I would observe it to see if it makes a 1, 2, 3 and eventually goes up and breaks structure. If you do trade the short time phase, once you get that breaker structure, you definitely can be looking for logs while you hopefully you're learning and earning, whether it's an ABC or whether it's a 1, 2, 3. So moving on to the euro yen. All the yen pairs to me are exactly the same strategy. They're all that's why I kind of like the yen pairs because they're all doing the same type of thing. Now, I would assume that if this does go up, that it's just a correction to the last wave down. As long as it doesn't go up and break structure, I would assume anything I see to the upside is nothing more than a correction to the last wave down. So I'm definitely still very bearish on the yen pairs until proven otherwise. I do think there's a good chance we might get a more significant pullback, maybe something like that. But I'm definitely still very bearish until the market tells me otherwise with a break of structure to the upside. Moving down to the 1 hour time frame, very overlapping, very sideways. Definitely looks like it's accumulating for a much bigger push to the upside. I have my Fibonacci retracement on here, but honestly, if this really is the end of a five-way pattern like it is on the dollar yen, then it's probably going to make a cut into the whole 5 ways down, which means it probably will eventually go up and take out this highway here, maybe turning into something like this, some sort of a bigger three-way pattern. So for me personally, I'm still looking for source because it really has not given me a break of structure to the upside. And until it actually gives me a break of structure to the upside, at least on this 1 hour time frame, this could possibly just go up to a Fibonacci retracement and keep going down. It seems like it might be due for a bigger pullback, and a bigger pullback would go up and break structure. But until it actually does break structure, we don't know that. We could possibly just be in a correction to this wave, and it could just go up to one of these fib levels and continue the downtrend. And the fact that these are kind of higher lows too also makes me think that this is all just like one correction. Like maybe this is an A, this is a WXY for the wave B. It goes up and makes a wave C, and then just keeps going down. So be very careful with the yen pairs and assuming that we're getting a bigger move to the upside because it definitely doesn't have to make a bigger move to the upside. Moving on to the pound yen. Now, the pound yen could possibly make a higher low at this 78%. And if it does do that, that's pretty significant. But for me, even if it does do that, unless it goes up and breaks structure, I would still look at any move I see to the upside as possibly just a correction to the last wave down. So I would definitely still be very bearish overall. Even if it does start up, like I said, it's probably just another correction to the downtrend. So going down to the 1 hour time frame, very overlapping, sideways, accumulating looking pattern. Very tricky looking thing. It kind of looks like the euro yen, like this is an A, and then it's like a WXY for the wave B, and then maybe this push up right here is the wave C. But and then this last push down is like a wave five of a downtrend, like 1, 2, and then this is a three. This weird looking thing is a wave four, and then this last push down is a wave five, and potentially now it's going to make a bigger move to the upside, maybe even go up and break structure, which would possibly be a correction to this whole five-way pattern down on the daily time frame. So I definitely am still watching my fib levels. I have my Fibonacci retracement from here to here. If it does go up to a fib level and give us another entry to go short, then I definitely would take it. I mean, if you were, trading all these little impulsive moves down, even on the sort of time frames, those are pretty profitable little trades. Looking for shorts has been an amazing strategy until the higher time frames tells us otherwise. It could literally continue to be an amazing strategy. So until you get some sort of a significant break of structure, be careful in assuming that the yen pairs are making a big turn. They might just go up to a Fibonacci retracement level, and they might just continue the downtrend really at any point. So anyways, don't forget to join my free Discord trading community, and thank you for watching and happy trading.